contract with the builder, and before the closing comes, and you're going to give it to selling the contract to third party. That means the contract between two peoples, builder and original buyer. Then you have to get the permission from the builder, number one. You have to get the permission from the builder. If you want to list the property or you want to market the property, get the permission from the builder, because the contract between two parties. Only the buyer cannot do anything his own without the builder's permission, because the party of the transaction is two parties. And after that one, for example, assume you buy this condo for 500,000. Say market went up to 600,000 right now, and you wanted to sell it to the contract, you want to sell it to someone for 600,000. That means the builder agrees first. That part is important. Builder agrees to change assignment. There is the assignment fees is involved. That's separate category. And your buyer bought it for 500,000, and your buyer going to sell it for 600,000. How much is the profit? It's 100,000 profit is here right now. If you want to assignments, you are listing the assignment, saying 600,000 is your price. What you had to watch, that's your question. What you had to consider here, this one. Your buyer, two ways we can close a transaction. For example, you bought it 2 years ago. Another 2 years, we had to wait another 2 years to close the transaction, but you are selling it right now because you want the money right now and you want to get out from the transaction. In that case, you are selling it to the new buyer for 600,000. That's mean your buyer buying a contract for 600,000, 100,000 price increase. Your original buyer already paid for the deposit 50,000, for example, to the builder. That means the builder bought the property 500. Original buyer bought the property 500,000. He already gave the deposit 50,000. Now he is giving to 600,000. That means the new buyer need to pay to the old buyer $150,000, because 500,000 already gave the deposit 50,000. Then they're selling it for 600,000. That means 150,000. If the assignment sale, the new buyer have $150,000, he can go to the lawyer. We can make an assignment of agreement, and through the transaction, lawyer going to hold the money. Lawyer going to undertake the money. The new buyer's lawyer going to undertake the money and send the new buyer and the old buyer, assigner, assignee, they both go to the builder and making the transaction. After they clear the transaction out, that means the builder going to give the assignment of agreement to the new builder. After that one, lawyers going to release the money. How much is the commission? How much you're going to do it? That's separate. That money, tax part, I'm not discussing right now. That money is coming under the tax category. HST and tax category separately. But basically, the assignment, you had to have three lawyers. One builder's lawyer, one original buyer have to go to his own lawyer, and the new buyer has to go to the lawyer. Assigner and assignee have to have the separate lawyers. And the agreement supposed to transfer from one person to other person, then only the lawyers can close the transaction. That's one side. That's mean they should have enough money. When they go to the mortgages based on 500, not 600. Even though assignment of agreement, assignment agreement for the builder going to be 500. Extra profit, the new buyer giving to the original buyer, that's not going to be play here for the mortgage side. Then the assignment of agreement, the buyers have to have enough money in their hand. And the original value for the mortgages is going to be not the market value. most of the lenders not look for the market value. They go for the original purchase price from the builder's price. If the closing is okay, for example, after the occupancy closing, the assignments, you want to do the assignment for your new buyer, that can be differently worked out. Both closing date can be the same day. And in that case, they can get the mortgage for the original price. But there are other HST issues involved for the same day closing. According to the Exercise Act, original buyer is someone eligible to get the HST rebate. In this case, we are closing it the same day without the assignment of agreement. The new buyer not going to have any HST the rebate. Whatever the case, whether he is going to live here, he is going to rent out, doesn't matter. Basically, assignment, careful to do the assignment, and you have to have the lawyer and make the assignment of agreement and discuss with the lawyers. And if you want to list the property under the assignment, get the written permission from the builder before you list. There are so much cases we have, even our own office as well as RICO. So much cases we have without the permission from the builder. Builder's verbal permission is not enough. You have to get the written permission from the builder if you want to list the assignment as a assignment listing. Okay. The next question. If you have any questions, send it to me. I can have a look. Next question. Last week, sorry, not last week. I think 2-3 days ago, I think Sarah asked the question to the Home Life chat, Home Life WhatsApp group about the HST side, new home HST side. I saw many different answers. Then I called Sarah and said, Sarah, don't take all the answers are right in the chat. Then I'll discuss with you in the Zoom meeting. Then I'm going to talk about, that's also only a few minutes because I did very clearly I did this HSC rebate many times. Even I saw the calculation and everything last assembly. I think this year we did one time for the HSC rebate or else December. Anyway, I'll go through right now as a summary. Okay. HST stand for, give me a minute, I get some calculation now for you guys, then it's easier now. All right, say builder building the some townhouse. The price is 500,000. It's costing the builder for the net cost plus his own profit, inside profit, everything. He wanted to sell it for 500,000. When the builder wanted to sell it 500,000, the brand new residential property he's going to sell. Then what happened? Whoever buying it, they had to pay for the HST. Any item you buy, you had to pay for the HST. In the real estate industry, resale real estate. Carefully listen this part. Resale real estate, there is no HST. Sorry, resale residential, there is no HST. Resale commercial, land, industrial, yes, we had to pay for the HST. But resale residential, including multi-residence, 50 units apartment building, doesn't matter, that's coming under the residential. Resale residential, there is no HST. At the same time, residential real estate side, since 2010 July, government implement the HST law. That's been builder build the property and builder wanted to sell the property to the new regular clients going to buy from the builder. They had to pay for the HST. Then how much they had to pay? 500,000 plus 13% HST multiplied by 13, 65,000. Then 500,000, any apply, you buying $1,000 phone, you are going to pay $1,130 because of 13% HST. Same thing here. 500,000 builder's price, 13% HST, 565,000. You had to pay to the builder to buy that particular brand new house. This was the one who was happening for all the time. After that one, what happened? Builders, there's a rebate portion is involved. HSC rebate. HSC rebate portion is different ratios, different portion. For example, over 450,000, only the PST. HST is including GST and PST. In Ontario, our HST is only 13%. Maybe you can go to Newfoundland, it's 14%. No, sorry, New Brunswick is 14%. Different places. We talk about Ontario. If it's Ontario, 13% HST. That 13% come from 5% GST and 8% PST. That's the way it's add up to 13%. For example, 500,000 house, if you want to buy, you have to pay the government $65,000 HST to buy the particular house. This is the basic rule. But government regulation is different. According to the government, federal government HST, they're saying if you buying the product is less than $350,000, around 33% of the HST you can get back. And the purchase price is 350 to 450. This will diminishing balance method and they're going to get less. After 450, there's no HST, no GST rebate. Under the HST, the portion of the GST, there is no rebate. In that case, we always talk about more than 450. The CACF price also high these days. When it's come to more than 450, there's no GSTs involved. Only the PST we call as HST. That one for the Ontario government side, whatever you pay, the maximum you can get back as a rebate is 24,000. 24,000 rule only applicable more than $450,000 worth of property you're buying it. In this case now the total HST is 65,000. In this case, buying the price for 500,000. Then what happening here right now? Used to be early 90s. There's no HST rebate. Everyone has to file your HST rebate. There's no discounting from the builder. The clients come to us, we file HST. I'm starting to do HST filing since early 90s. There's no builder not going to give a deduction. What happened after that one? CRA amended the law saying that one HST, builder can take the rebate portion, the 24,000 rebate portion, builder can take it out. Builder can take out the 24,000 rebate portion. And what happening? The builder even advertising the price 500,000 plus 65 HST 565. Instead of 565, taking out the 24,000 rebate, and he advertising for 541,000 house price. That's one of the marketing builder doing it. But at the same time, that 541 is an HST rebate. Who's going to get the rebate? 24,000. Builder going to get it on behalf of you, because if you're going to live there, that particular property, if you're going to leave that property, that 24,000 rebate, after you buy it 565, you have to get the rebate back. Instead of get the rebate back, builder doing all the paperwork, and he's going to get the 24,000, and he's giving discounting price. Other word, discounting price, builder giving 541,000 for the owner occupying peoples. For example, if you are saying you want to rent it out, still what the builders are doing it, they are still going for the same price as 541 and saying the time of the closing the transaction, pay extra 24,000. If the builders apply the CRA and they want to do the favor for the Canadians not to do the paperwork, but there's another issue now for the investor side. Investors, if the original price is 565, they can get the mortgage for NTR 565 rather than 541. Anyway, this is happening right now. Under the HST rebate, 3 category: owner occupying property, rental property, flipping property. Yes. First, owner occupying property, builder, you are telling the builder, I'm going to live there, and builder doing the rebate application, and builder going to get 24,000 on behalf of you from that particular property. You are not losing anything. You are paying the less money, 541 instead of 565. If you are an investor, you're going to rent it out. You're telling you want to rent out. In that case, what happened? The time of the closing the transaction, seller's lawyer will say, okay, you have to pay another $24,000 because the builder is not going to help you out, because you are an investor. You pay the money and go to your own accountant and get the money back. That's the way the transaction closing. The flipping the property, again, yes, it's buying for the flipping purpose. You have to pay the HST, but you cannot apply and get back if you are flipping the property. Okay, the normal situation, if you are buying and living there, as long as you leave the property and the public record, CRA, Election Canada, driver's license, everything, you change it, there's no question to ask. And if you're going to rent the property out, you're already paying the money, 24,000. If you are paying the $24,000 HST, yes, you have to prove what kind of rental business you are doing it. That's under the CRA Excise Act. If you are doing the Airbnb, you are not eligible. If you are doing the weekly rental, monthly rental, you are not eligible. Minimum you have to have 1 year lease term. If you have 1 year lease term, after you buy the property, you can apply and get the HST back. There are 2 kinds. One, you pay the HST money and get back. That's the one CRA looking for. Most of them always tell the lawyers, I'm going to live there. After 1 week, they want to rent it out. In that case, we had to revise the applications. Saying that one, builder taking the HST 24,000, please cancel that HST and give it back to the different ways for the rental HST. If you are flipping the property, you have to pay the HST and buy the property, and you cannot get back. The question came from Sarah's question, as per my understanding. Somebody buying the property, Sarah, you can come and ask in case I misunderstand your question or anything else differently. Somebody buying the property, after 5 days, they want to sell it to somebody else, new person. She asked, who is the one eligible to claim the HST? Claiming the HST application, there are rules. Number one rule, you had to have a builder's application. That builder's application, you had to have, then the person who buying it, they had to have the builder's original application or assignment of agreement. Builder's agreement, original purchase agreement or assignment agreement, you had to have it from the builder. That the person can only claim the HST rebate, nobody else. Okay. Second thing, for example, if it is a rental property, with a rental property, you have to have the builder's application, plus you have to have the lawyer's closing statement showing that one you paid HST in advance, or you want to revise the HST, that's a different story. You already paid the HST and you want to collect back the HST. Third, you have to give 1 year lease term. It's not the flipping side. You have 1 year lease term. You are renting out to someone else for this particular property and your ID. You don't have to get the HST number. They will assign one number themselves. And for example, Sarah, your question: you sell the property on the February 1st. You close the transaction February 1st. February 5th, you sell it to somebody else. You are not eligible. Nobody is eligible to claim the HST back here. I'm sure about 100% this law. This is Excise Act. You can go to the Excise Act and you can check it out. The new buyer is a resale buyer. After 5 days, you are buying, the person who buy, even though they buy the brand new property, that property is a resale residential. There's no HSTs involved. What are the price he buy? With under price or price, doesn't matter. That's the market price for the residential resale. That new person doesn't have any access to apply for the HST. And your original buyer, after you close the transaction, you sold the property within 5 days. Then that's mean you are coming under the flipping property person. Is you not a rental category? Then there's no one is here to get the HST back. But some agents are telling you as a realtor, are telling you guys to make you sell. Otherwise, no point of this meeting. It's not a tax class. Many agents advising the clients wrongly. You have to keep the property 1 year. I don't know where they get the law from. For example, you are buying the property. As Sarah's execution I'm going through. This January 30th, close the transaction, and somebody moving the property February 1st as a tenant. Somebody moving in February 1st with a 1 year contract. You are applying for the HST rebate, and 6 weeks. Normally, the good time, the pandemic can work from home, CRA people, sometime more or less. Now, the regular time within 6 weeks, sometime even some agents get 4 weeks time. Get back the HST rebate, save 6 weeks means March 15th, you're getting back the HST. You are selling the property on the March 1st. There's no issue because you have the rights to sell the property with the tenants. Because you bought the property for rental purpose. After you buy the property for rental purpose, you are applying for the rebate. Yes, you are getting the 21,000 rebate. And the second month, you are selling the property with your tenants. In that case, the rules, there's no changes. But if you sell it vacant within 5 days, yes, you are not eligible. But if you are rent it out for 1 year, yes, you can get back the rebate and you can sell the property. There's no issues. But if you sell it higher, that's a capital gain. That's a different part. And sales people, please bring your knowledge up. In that case, you can make more sales. If anybody don't understand these two questions, either assignment side or else this new home HST flipping property, rental property, come out and talk to me. I can explain to you before we move on. Okay, if not, I'll go to the chat box here. Chat box from Amoeba. Good morning, Silvana. What is the government benefit available for the first-time home buyer? Okay, first-time home buyers getting different kind of benefit from the different level of organizations. That means provincial level, municipal level, if it is in Toronto, municipal level, provincial level, and the federal level. There are a few levels. Okay, the first one, Amoeba, your question, what are the benefits? We always talk about the RRSP. RRSP is based on the federal benefit. RRSP started, it's a tax deferral program. You, instead of paying the tax, you are not paying the tax and you're buying the RRSP and taking the tax advantage. That money, they started RRSP, Registered Retirement Saving Plan. That means you have to withdraw the money. The government giving the tax deferral program to keep your money for your own retirement. There are so much debate. If we talk about estate tax, there are so much debate whether it's good or bad, many things. But anyway, we assume it's a good one. In that case, the government giving the money after 65. The reason they're saying after 65, the people's personal limit, everyone have a $12,000 free tax. When somebody becomes 65 years of age, they're getting another limit is increasing. The limit is increasing. The $8,000 limit is increasing for them. In that case, when they withdraw the RRSP, they have a good tax bracket. They don't need to pay for the taxes, reasonable taxes. Okay, that's the reason the RRSP is designed for after 65. Okay, that money sitting there, the government want to encourage. If somebody have an RRSP money, they can withdraw the money and buy the house. It's an advantage for the housing problem. You buy your own house. Everybody has to live in your own house. Plus land transfer tax and everything, builders building the property, then government would encourage the real estate industry to move, and they're giving a benefit. That's a number one benefit. The first time buyer, there's so much definition for the first time buyer. Today classes, I want to make it short because it's a question class. If it is go first time buyer, I can go through more detail. Who is the one first time buyer? Categories, there are some gray areas there. You think as a first time buyer, nobody, they don't have a house in Canada. That's better way. Okay, the first time buyer can go up to $35,000 withdraw the RRSP. The difference between the first time buyer and the regular withdrawal, if the first time buyer withdraw the RRSP under the new home buyers plan, they don't need to pay for the withholding tax, and they don't need to pay for the RRSP income that particular year. For example, you are somebody buying in 2020 for the house, they're withdrawing 35,000. The regular withdrawal RRSP is supposed to be include that particular year income. This 35,000 RRSP is differing to another 15 years. That's been when you buy 2020, 2021 is like a one grace period. If somebody buy a brand new property, they need to move in. There are many reasons we can say. 2022, after 18 months, the tax sale, they are divided by whatever the RRSP clans withdraw it, divide by 15, and they are paying the portion of the RRSP as a back to the income. That's mean first, make it short. First government benefit for the first time buyers, write it down. RRSP. If they have an RRSP, they can withdraw the RRSP. The one requirement, the RRSP is supposed to be in the bank only for 90 days. If the RRSP is in the bank 90 days, they can withdraw it under the home buyers plan. There are some other tricky points is there. I'm not going to go that one because today's topic is not that one. Keep it number one benefit. Number one, by home buyers, new first time buyers benefit RRSP. Each buyer, can be 2 buyers or 3 buyers, husband, wife, and the daughter. Can be 3 buyers, $35,000 RRSP. Each buyer can buy their first home under the tax deferral program. They don't need to pay for the tax. They can divide the tax and pay slowly for the 15 years term. That's number one. Number two, land transfer tax. Land transfer tax is depends which part of the land transfer tax is, either provincial land transfer tax or municipal land transfer tax. They are both almost equal right now. Land transfer tax. There are minor differences there, but at the same time, up to $4,000, $4,000 rebate. You can get it instant rebate. That means you don't need to pay the money and get back the money. There's instant rebate as long as you're declaring to the lawyer you are a first-time buyer and you're promising under the oath for the lawyer you're a first-time buyer. In that case, municipal and provincial is a $4,000 rebate. Around $400,000 worth of property, you don't need to pay for the taxes. Basically saying, first RRSP, second land transfer tax rebate for the first-time buyers. The next one, federal government as a credit. It's not a grant. If the first-time buyer, if you already have an income maker, if you are an income maker, you are paying the taxes. Any province you are in, you are paying the provincial tax and the federal tax. Except Quebec. Quebec is the one we are filing separately for Quebec tax and the federal tax. All other provinces also having the separate tax state, but the Canada Revenue Agency, they are looking after the province. For example, Ontario, if you file the taxes, provincial tax and the federal tax is going together, and the government of Canada CRA is a transfer payment to the province. That's means you are paying the province as well as the federal. Under the federal portion, if you tax bracket, you already contributed the money, $750. $750 you can get back if you already pay the tax. That means if somebody's income is zero or somebody is in welfare, the government not going to pay you $750, but you already paid the taxes to the government. In that case, government can give you back as a credit, new home buyer's credit, $750. $750 you can get it as a credit. And what else? I had prepare this question. These are the major one for the first time buyer side. And the government introduced, you guys know that one, 5% matching. If somebody buying the property, there's a new law came last year, CMSCH, and the government helping for the down payment. If somebody buying with the 5% as a first time buyer, the property value is 500,000 or less. Government CMSCH match it up another 5% and give you as an interest-free loan. And if somebody first time buyer buying it under the brand new condo with 5% up to 10%, that's the highest one. Up to 10%, CMSCH will through the CMSCH you can get it and you can register it officially as a down payment. That means if you have 5%, another 10% you can get from CMSCH brand new reconstruction, or a resale another 5% from CMSCH, and that money is helping you for the as a down payment. Basically, Amoeba, these are the ones for the first time buyer. If anything comes to my mind, I can come back and say it. If you are missing anything, please feel free, guys. Around 80-90 people are in the Zoom. Come and tell me. 121. Oh, thank you, Hannah. As at this call, whether 121 people like to learn, I'm happy. I'm happy to see the number more than 100 because the knowledge is power. You have to have the knowledge. I don't want to waste with only just one question here, but I hope Amoeba, I answer your questions. If you anything you want to ask me, just come out and ask me right now. Or
Thank you.
Next question. What's the next question, Kanna? That's the next second question. That's Vela. Oh, Vela sent me the question, Mr. Vela. Hi, Silvana. Can you personal real estate corporation do lending? Yes. Very good question, Vela. Very good question. Okay, the personal real estate corporation. Can you increase the heat a little bit more? The personal real estate corporation is a corporation. It's a commission corporation. That means all this time you was getting the money under your name. Now you can get the commission under the PRAC. But the restriction for the PRAC, the income, you can have only one kind of income. That's a commission income. But other passive income is exception. That means you are under the PRC corporation. Say, well, I assume your PRC corporation, Vela Subramaniam PRC Inc. or else Vela Homes, whatever. That corporation, you cannot do IT business, you cannot do delivery business, you cannot do any other staging business. But those are earn income business. You cannot do it. But at the same time, your PRC corporation, just money sitting there in the PRC corporation, answer your question. Yes, you can lend out. You can lend out to the second mortgage by yourself. Okay, you want to invest to, for example, like our big corporation or somebody else's big corporation. Yes, your PRC corporation can invest to in the mortgage industry or any other corporations. Yes, they can do it. Plus, your PRC corporation can buy the house under the PRC corporate name. Those are the income going to come, that particular, those kind of income, those called a passive income. The passive incomes are exception by the PRC corporation. You can have it. Yes. Answer is yes, you can lend out the money. Or else you can invest the money in the under the big corporations. The next question. Okay, assignment sale. Mahesh, assignment, if cannot put on MLS, what are the steps? Office and agent. Okay, Mahesh asking the question, assignment sale, if I cannot advertise in the MLS, then what can I do? It's a very basic one, Mahesh. First, you have to ask the builder to advertise your own, you have to ask them, because the party of the contract is two people, builder and the buyer. The buyer cannot do whatever he likes. You have to ask the permission of the builder. Okay. If the builder said, I cannot do, you cannot advertise in the MLS, you can advertise your own website. You have WhatsApp. We have 600 salespeople in our office. That's the advantage to work in the bigger offices. You can advertise it through the office. You have an exclusive assignment sale for this particular condo or particular project. If anyone want it, contact you and you can deal with them. And the WhatsApp group advertise. It's almost like a private sale or exclusive listing. Okay. Thank you. The next one, Michael. So if you get the home from a builder and rent it for 1 year lease term, can you claim 24,000 HSE rebate? The question asking if who's asking the question? Michael, eh? Okay. If you get the home from a builder and rent it for 1 year lease, then he asking after 1 year's lease or the beginning of the 1 year lease. The question, come back and talk to me if you want. Can I claim the 24,000 HS rebate? Both cases you can claim. Either you buy it, you already rent it out to the tenants, and you don't need to keep your money for the CRA make. You can simply apply it and get it right away. Okay, if you forget to apply, yes, of course, after the lease term, after 1 year lease term, still you can do it. HST part under the Excise Act, you original closing date, not assignment closing date, original closing date, not occupancy date, original closing date, you have a rights between 24 months rights. In that case, your question, either after 1 year you claim, that's fine, or else if you have a lease, you can claim it immediately. Okay, you get back 24,000 HS rebate. Somebody saying there is no sound. If the hope is that maybe your end, check it out, Bahi. Your system, if everything is working fine in our end. Okay. Anil Gopalakrishnan, is there any limit? Is there a time limit to claim HST from the date final closing? Yes, that's what I said right now, Govi. The time limit is 24 months. If the 24 months pass, you are not eligible to claim the HST. You have to start the application within 24 months. Within 24 months. The next one, can husband consider to be a first-time buyer even though wife owns 2 houses? Okay, that depends on the marriage date. First-time buyer, what? Which category you ask the first-time buyer? Land transfer tax rebate or RRSP? There are things are there, but the husband and wife comes, but the situations come. When did they buy the first house? For example, in your question, the wife have 2 houses. If the wife already have 2 houses before marriage, then after that husband come with nothing, then he is marrying. This, of course, he can go for if the next property 50%. He can claim the first time buyer benefits. That's under the land transfer tax side. You can ask for the rebate. But if you are buying the property for the rental purpose, no, you cannot claim. This rebate is only helps for the owner occupying property. If the property is not owner occupying property, the property is a rental property, land transfer tax rebate is not eligible. Answer your question, yes, the wife. Okay, after marriage, wife bought the property. That means now he cannot claim it. Before marriage, wife already come with wife. The time of the marriage, wife come with the 2 properties. Yes, husband is eligible for the land transfer tax rebate, for the first time buyer rebate. And the next question from Sarah. A daughter wants to buy the property, first time buyer, pay less than 20%, but won't get approved without father. How that works mortgage side? Father is not first time buyer. Okay, Sarah, I already mentioned this one. Yes, father and the daughter is going to buy the property together. Father's portion is not going to count because he's not a first time buyer. The daughter's portion is going to count as a 50% of the property value. Daughter will get the benefit as a first time buyer benefit. Dinesh Sarish Kumar asked the question: if I buy a brand new stack house, that's been is a townhouse, 350,000 for rental, still I do to have to pay 24,000 HST. Dinesh, whatever you buy doesn't matter. Even though you buy peanuts for $1, I mean, salted peanuts, unsalted peanuts. My question is started with the peanuts. Then I realized there's a different category for the peanuts, salted and unsalted. Okay. Say unsalted peanuts you buy, you have to pay for the HST. Doesn't matter stack townhouse or $300,000, doesn't matter. Even $50,000 land, not land as HST land. That's okay. Anything you buy new product from the builder, you have to pay for it. Even I see in Oshawa, many people bought it for 200,000 studio rental condos. Everybody has to pay. There's no exception. But if you buy anything below 350,000, you can get more rebate because the GST rebate and the PST rebate, that's including HST rebate. Okay. Sometimes some cases I did around 350, 400,000 worth of properties. It's 27,000, 28,000 rebate. 24,000 we always keeping as a cap because you are not the easy math calculation we are doing it. Your question you specifically say 350. Yes, you can get back more rebate. GST as well as HST. There are a lot of things is there. The value with the time you buy the value of the value, and now what is the value, how much the value increase, and what kind of rental you are doing it, with a rental guarantee property management doing it, or you are doing it yourself. There are lots of gray areas there. Not the gray areas, not the regulations are there. I'm not going to go through those ones because today's topic is mortgages. I already 10, 15. But the questions are good, guys. Question is very important than whatever my schedule. I can go faster my theories. Can I write other question? Can you move a little bit more? The first time buyer, I can see the last line only.
Yeah, that's only.
Same question?
Yeah. So,
Okay. Okay. Thank you. When discussing mortgage, can you briefly explain about the co-signer when a mortgage is hard to close? Is there any other option to get the mortgage approval without a co-signer? Assuming the mortgage is special case. Sure, I will explain, Suren, that one. It's a good question. You bring it up the co-signer side. Sure, I will explain that one. Resale home can assign to others for whatever the reason is the closing. Vairaj, yes, you can assign if the both parties agrees. The assignment is, as I said, assignment is based on two parties, the contract. You are buying the residential property for the 90 days closing. You find somebody else. They want to buy this particular property. The original buyer doesn't want to close it. You want to transfer to somebody else. Oh yeah, you can assign to someone else. It's possible, but the same day seller has to agree because the party of the transaction is buyer and seller. If only one person cannot make the decision, seller cannot do anything. Seller's property is a property. Buyer, yes, if the seller agrees, you can assign even higher price. You can assign. Even happened in my office few deals, few transactions in 2016 and 2017 beginning. The price increase, yes, someone did. Okay, the resale houses can be assigned. Let's finish that part, and that's all questions, eh?
Yeah.
All right. Question. Anybody want to come and ask any questions?
Hi, Silva. Can you hear me?
Yeah, sure, clearly, yes.
Okay. Just a question. So when I mean like the daughter wants to buy, I don't know if this is wrong or correct me, but like as a first-time home buyer, you have an option to pay less than 20% down payment.
That doesn't.
Is that a thing or no?
No, that doesn't apply because the one party is resale buyer. I mean, father is coming in.
So in this case, like how can they, because it's like a property that's going to be like above 1.5. Basically, I think like the father just wants to acquire another property, but wants to purchase it under the daughter's name.
That's case.
Put less down payment, right?
No, Sarah, in this case, again, other Surya also asking the co-signer part. Maybe Kanna could explain to you more of this one, but I'm going through right now because I'm standing here. Okay. There are two ways you can do it. Either the buyer is buying the property and they are a first-time buyer. They want to go with 10% down payment. Of course, the CMHC premium and everything. What they had to do, the co-signing part is two categories. One, they are coming into the title. Other one, they don't need to come to the title. They only signing for the co-signing part. Without the title, if anything happened, the bank can go back to the father, or the bank can go back to the co-signer. In this case, the co-signing part in some cases only 3 years, don't even 5 years mortgages. The first 3 years, they are paying in a regular manner. In that case, even after three years, they can take the name out. But the situation is right now. It's going as a co-borrower or co-signer. The two different things here. The father coming to the title and buying with the daughter, definitely the transaction, they had to go for a 20% down payment because of father is not a first-time buyer. The daughter can buy, the daughter income is not enough, father is co-signing. That's also depends on the institution, the lender. Some lenders doesn't allow, some lenders allow. I know one lender from TD Bank, because I deal with one of the client. TD Bank allow them with the three years guarantee, because the father's credit was very good credit, and he showed the money big time. They said only 3 years co-signing. That is not going to be the title, and the father's credit, of course, going to show. He is a co-signer, but at the same time, his name is not in the title. In that category, just she can buy with 10%. Yes.
Amazing. Thank you so much.
Okay, you talk to the lenders, Sarah. This is a very good question for everyone. Very good question. You can ask who is a co-borrower and the co-signers. Either how they're coming, the title and no title. Most of the mortgage brokers doesn't want to go through. They want to put it together for both people. But it's possible for the depends on the lender. Okay. If you want to have more any other details, I can tell Kanna at the end to come and explain to you guys. Okay, I'm going to go through right now. If there's no go through right now for the topic, what are we going to talk? Type of mortgages. First, I said first type of mortgages. Okay, under type of mortgages, conventional mortgage, high ratio mortgage, private mortgages. There are three different kinds. We can talk. Conventional mortgage. Today's standard is a 20% down payment. If the borrower putting 20% down payment, consider he's a T4 income person. Regular working person other than the self-employed income. He's going with the 20% down payment. He is considering as a conventional mortgage. That's we already know. Second thing, anything less than 20% down payment. What they have to do, the lender need to get the insurance from CMSCH. What does that mean is in Canada, banks, they form the bank, and the banking regulation, not for the mortgage purpose. Banking regulation to keep the money and lend the money. Salary go to the bank, everybody keep the money in the home. That's an issue. Then everybody's salary is going to the bank, and we are using the cards. That's the way the banking system is. Then banks have enough money. Then banks want to lend the money out. Bank tried to get into many businesses. The first business bank went into, as per my banking knowledge, mortgage business. After that, they went into the stock, mutual fund and investment, security side. After that one, after he came to Canada, they started for the car insurance, life insurance, and business. Bank doing the different business and with the different restrictions. Okay, when I stick with the banking side only for the mortgage side, when the banks start to give the mortgage under the banking regulation, if the banks can make a mistake, bank CEO can make a mistake, their policies can be changed. In this case, in any changes come to real estate industry, up and down. We already see the World War, First World War, Second World War, deep depression and the boom. And even in our eyes, we saw 2008 the recession and 2016 boom and 17 downfalls, and again it's going up. What we're going to think for the future, that's a different topic. Okay, in that case, bank doesn't want to lose the public's money. Banks are private. Bank is not government. Bank is not a crown corporation. Banks are private corporation. Who are the owners? Can be many people. Government also, they won't buy, they can buy the shares, but at the same time, banks are private. In this case, government restriction for the bank, the CEO or the management decision, if they overspend and they positively think about the real estate market goes down, anything happen, banks go into bankruptcy. You can see it in US. So many, go to 2008 history and see how many banks went to bankruptcy for 2008 this year. You can see. In order to protect the banks, what happened, the CMSCH started earlier, but they changed the name to CMSCH 1953. And what they did, insuring the bank. That's been the buyer going with the 10%, less than 20% down payment. What happening? The buyer has to pay for the CMSCH premium, insurance premium. Buyer has to pay for the premium. I'm going to go through the premium ratio and everything right now. And they are buying the insurance from who? From the government of Canada. This is the best banking system in the world. most of them follow. We know all this. 5 years ago, the European Union and England, they hired Honorable Mark Carney, for our former Bank of Canada governor, and he was guiding them to come out from the certain system, because of Canadian banking system is that's strong. That's the reason we don't see the bank failures in Canada, because banks are protected. Even the mortgage industry, banks giving the money, that's source of balance sheet money. That's the reason sometimes if you go to, maybe Kanna could explain to you guys, when you can apply for the mortgages in the say month of October, bank year end is October. In that case, bank, based on the balance sheet, bank already give out the money. September and October, maybe they turn down your mortgages very strict, and they start again December back, because of they have enough money in the balance sheet. There are a lot of things is involved. Make it short. All the mortgages, less than 20% of the mortgage, less than 20% down payment mortgages, we calling as a high ratio mortgages, and the Crown Corporation, CMSH, the government Crown Corporation, that's insuring the mortgage. That happened. So many changes happened in our lifetime. We've seen it refinancing, second house. One of the times you can buy the second house with the CMSH. They stopped that after the second house. You can no CMSH only one house for one person, not first time buyer. Only one house for one mortgage for one person changes. And the refinancing category used to be CMSH refinancing category was they start from 95 to 90, and they later on is 80%. There are lots of changes government did, because they want to stop the borrowing side. In this case, CMSH premium, I'm going to go through right now and give you guys for some details for the CMSH premium right now. How much CMSH is charging for the premium side. For example, if someone want to buying the property, someone getting the mortgages, if someone wanting the mortgages, CMSH changed the premium in March 2017. After the same time they changed it for the foreign tax credit and stress test and everything. Anyway, basically saying, we all know minimum we have to pay 5%. One of the time you can go 100% money. Officially, you can buy the property for the 100% financing. Even 100% financing property. I'm talking about the stories, history, but good to know, guys, for your knowledge side. Okay. If you go to the bona fide contractor and say you want to repair the house, the repair in the house, again, the money going to be under the house, renovation of the basement, renovation of the kitchen, everything. Say $40,000, you go there, give the bona fide company with the HST and everything. Even after you buy the property, the mortgage, they can pay you by step. That's mean they even one of the time, banks was giving even more than 100% money for you guys to buy. Anyway, nowadays, we know that part, minimum 5%, you have to pay the down payment. If you're paying the 5%, there are two categories coming into the 5%. How much more CMSH premium, CMSH premium you're going to pay for the 5%? That's coming under your own down money, or your own down payment, or borrowing down payment. That's called traditional down payment or non-traditional down payment. For example, if a couple start to work and they say the money in the bank, the money sitting in the bank for last how many months they do? 3 months? 3 months or more in the bank. That's been their own money. That's coming under the traditional down payment. You are saying some grandpa is giving a gift. That's coming under the non-traditional down payment. That's mean even the 5% you don't save yourself. That means you don't have a capacity to save yourself. There are two kind of CMSH premium is there. With a gift letter down payment or your own down payment. Okay, that's mean if you are going with the 5% in the regular manner, traditional down payment, CMSH premium is 4%. That means you have to pay the 4% of the mortgage value. That's a good part. It's only one-time fees. Another good part, no time period until you keep the mortgage, not the refinancing in the middle. Until you keep the mortgage, that 4% going to add up with the total mortgages, and you're going to pay that money as amortization money. That's an advantage. If the down payment is a non-traditional down payment, 4.5%. 4.5% of the total value of the mortgage, they're going to add with the mortgages. Okay. If I go to 10% down payment, If you have 10% down payment, it's 3.1%, 3.1% CMSES premium. For example, it all changes from to 2017 March, used to be lower. For example, 10% down payment used to be 2.4. Then the government changed it to 3.1. Of course, they need a premium more because of the risk and everything. And then we are paying 10%, 10% down payment, people is going to pay 3.1%. And 15% down payment. If somebody going 15% down payment, 2.8% they had to pay for the total mortgage. Or for example, I was listening one day Khanna was explaining one of the client, they are ready to go for 15% down payment. He said, borrow the money from somebody else to put another 5%. You can save just one lump sum, 2.8% multiply by, for example, $1 million mortgage is 28,000 or 500,000 mortgage, 14,000. You can save that money. You borrow the money from somebody else and put it in. I was listening one day. Okay, what I mean is, as far this calculation, if somebody come with 15% down payment, they still have to pay 2.8% CMSEH premium. Up to 80%. For example, 80% is a conventional mortgage, but conventional mortgage, the bank supposed to approve your mortgage. You are under the conventional person. What does that mean is 20% you don't need to pay for the CMSES premium, but at the same time, if you are going, your money coming from your own company, your money coming from your own company, you are paying the salary for yourself. That's mean your money is coming from your own corporation. Or else, for example, self-employed peoples, different categories, they're looking whether it's conventional or not. In this case, if you are somebody going with even 20%, some cases, bank may not going to ask you directly. Bank not going to ask you directly to pay for the CMSES premium. What happened? The bank, they put their own money to insure their mortgage in the CMSEH, and they increase the interest rate. That's the reason we going with the different B lender to the A lender. Sometimes B lenders are charging more money. There are many different reasons. Maybe the risk ratio is different. Your credit is bad. B lenders having a different accounting system based on the credit. They are keeping the different bracket for the different credit peoples in the under their own balance sheet for the public, the stock market changes and everything. They had to look for the different accounting, different accounting method. But anyway, they had to charge extra fees. Sometimes they charge extra fees to cover the mortgage CMSEH premium for you guys, and they can go up to 65%. Even though somebody go with the 35% the down payment, that's mean loan to value 65. Mostly we talk about 35% is rental property, foreigners property, and non-residents property. Some we talk about 35. And there are cases the lender have a right to ask to go for the CMSEH premium, securing their mortgages. In case anything happens, they don't need to worry. That's happening with the Canadian system. That's mean CMSEH premium not only up to 20% down payment. Even though you go with the 25% down payment, 30% down payment, there are cases they are getting their own CMSEH, securing themselves and charging some extra interest rate. That's one of the reasons B lenders charging more. In my view, I might be wrong. I don't want to give you wrong information. Maybe I can correct me after end of the session. I believe I'm right in this side. He can help you out. This is the CMSEH premium side, and the next one, when you are applying the mortgages, as I said, from different kind of mortgages, high ratio mortgage, low ratio mortgage, conventional mortgage, and private mortgage. High ratio mortgage, we know high ratio mortgages is less than 20%. Low ratio mortgages means self-employed people. Self-employed people going with even 28% mortgages. That's not coming into the right away. Conventional mortgages are low ratio mortgages, and conventional mortgages just T4 income people, working income people going with the 20% down payment. The private mortgages is getting more and more. How many percentage in total, Kana, right now for the private mortgages in total? You were checking the 16%?
16, less than 20%.
Yeah, less than 20% of the mortgages. That's a huge big percentage. It's a huge big percentage in the total mortgage is going into the private side. Private side means big corporations, syndicate mortgages, and the third-party mortgages. Those are mortgages. When you go, the interest rate is definitely higher, and there's the lender fees is involved. But at the same time, as a real estate agent, if they are qualifying, you want to qualify for temporarily and they can move to the banks later dates. That's called private mortgages. Okay, the next part I said, mortgage process application. How do you go with the application? Okay, each and every real estate agent, you have to have a schedule. I told you, every real estate agent make a checklist for the buyer side checklist, seller side checklist. You have to have it and you have to follow the checklist. You have to follow the checklist, create the checklist. And if you have any question, ask me what are the things you have to add in the checklist. I can come with my schedule and tell you guys if anybody bring that question. Okay. In your checklist, you have to have, if you are helping for the buyers to get the mortgage, first of all, you are not going to do that job. Because buyers has to do their own, but in your because according to RICO regulations, real estate agents are real estate agent. You are not introducing a mortgage broker. If you are introducing a mortgage broker, you have to introduce 3 mortgage brokers minimum 3 numbers you have to give. Out of the 3, who are they picking? They're asking you, can you come with me to the mortgage? Yes, you can go to the mortgage. In that case, what are the things you have to prepare it? You have to have a checklist. Number one, every single real estate agent, you have to have a copy of your purchase sale agreement. You have to give 1 copy to the clients, but you have to have 1 copy for yourself forever. That deal. In that case, you can do so many advantage on that side. Your database creation too. So many reasons. You have to have your own copies. Okay. Now, number 1, you have to have a purchase sale agreement copy. Number 2, get the listing with the picture. The listing as and go for a. If you don't want to show the commission to the clients, go for the client full version. That's fine. But the picture supposed to be in the MLS listing. In case there is no pictures in the MLS listing, you have to tell the listing agent to upload that one. I seen some listings. No, there's no pictures. If there's no pictures, the mortgage company not going to give them. Then definitely they send the appraisers and ask them to get the pictures. That's going to delay some time, and the cost is involved too sometimes. Even if they can do online appraisal for the online appraisal, still there's no pictures is important. Okay, go with the listing with the picture. Sometimes the listing, when you print out, you may move to the pictures in somewhere in the backyard or washrooms or living room. That's not enough. The front pictures, okay, please. And you have to get the listing. Number 1, you have to have the front. First part is listing. Second, purchase sale agreement. Third, tell your clients to get the job letters, and wherever they're working, they have to get the job letters as well as pay stub. 2 pay stub. That's enough. And you have to go to the mortgage broker. Don't give your documents to the mortgage broker, guys. Please, there are so many reasons. Agents calling the office and say, can you send me the purchase sale agreement? And we gave it to the mortgage broker. Mortgage broker is not doing it. We had to move to other person. You have to have a copy by yourself. You please keep the copy. Just buy the file and write it down, the name of the client and the address of the property, the address, and keep a copy for yourself. And give one set to the mortgage broker. And when you go there, mortgage brokers maybe go through the application process. Application process is easy for them. There are so many reasons mortgage brokers are complaining. The clients coming, agents are coming, the clients without the information. Then the clients will say, okay, I'll go and get it and send it to you. They don't send it until the last minute. After that, they're blaming the mortgage brokers. They don't even apply to the mortgages. Now the market is went up now. We had to expect market might go down too. We don't know. In this case, appraised value might change. Appraised value may change. Even in our office, there are 2-3 deals we didn't close it because the appraised value came lower. There are so many things happen. Tell them to do right away now. For the mortgage application, you have to tell them if they are going, you have to give them a guide. You have to give them a guide. What are the things your mortgage broker need? Listing, purchase sale agreement, your job letters, 2 pay stub, NOA or different things they can request later dates. Okay. And the next part, credit. The credit side, you have to maybe you want to pre-qualify for the buyers sometimes. When you pre-qualify for the buyers, you go and get the credit check and those kind of things. Tell them to pull their own credit. That's an advantage. That's an advantage because when you pull the credit, when you pull the credit, there's going to be the stamp. Who is the one pulling the credit and what purpose they're pulling the credit. And as for my knowledge, I might be wrong. Don't take it, but I'm saying is right. 3 times if you pull the credit for the same purpose, it goes 10 points down. Am I right, Kenneth? Yeah. If you're going with the mortgage purpose, if you're going mortgage alliance and TD mortgages, not the regular credit card, that's a different, not the car loan, that's different. Same category, you can go each and every pull, that's marks. In this case, tell the clients to pull out the credit they own. Equifax, they charge $25, less than $25 they charge to pull a credit, detailed report with the score. And there are different organizations. The credit reporting organizations are different organizations. The Equifax, TransCanada, and different other companies. And when you pull the credit, most of them are pulling for TransCanada and Credit Union. I heard that most of the companies are moving from Equifax to TransCanada. Is it true? Not really. Okay. Okay. Tell them to pull the credit bureau, and you have to learn yourself a little bit how to see, how to read the credit bureau, how to get the credit bureau. It's no big deal. If you sit down there and if you look at it, you can understand. Or else come talk to the mortgage brokers like I don't know anybody else. They will explain to you. Or else come to the Zoom. We will talk about it. When you check the credit bureau, then you check the credit bureau. As for our knowledge, credit bureau is 0 to 900. 0 to 900 for the credit scoring system. 840 and 840 is right numbers. 840, no 880. Yeah. The banks are looking for now. But what score banks are looking for right now? Minimum score
640.
640. Yeah. 640. Okay. The banks are looking for 640. Minimum 640 banks are looking for right now. If any credit score is anything is more than 640, they are calling us a good credit. But at the same time, credit score is not only the factor here, because some newcomer to Canada coming there and getting only one MasterCard from the Canadian Tire, and they are rotating that MasterCard for last 6 months. Maybe their credit shows 850. That doesn't mean they can get the mortgage right away. Then talk to the mortgage broker. Score is one side, plus score is not all. How serious credit they have and those kind of things are important. Basically saying 650 and more credit, minimum 2 credit lines. 2 credit lines mean either RRSP credit or a credit card, car loan, can be anything. There are 2 credits, 2 lines, more than $2,000 for 18 months. 18 months or more is considered as good enough for the mortgages. Good enough for the mortgages. When they pull those ones, maybe you can look at basically for yourself. Don't give any legal advice or any special advice. With a real estate agent, you are not allowed to give advice. You give it to the mortgage brokers for the pull out credit. In that case, they don't pull their credit and they can see it and they can structure the mortgage wisely. That can be one of the part for the application side. When this comes to the credit side, guys, I can the credit alone. We had to go for a full meeting and full seminars, how to read the credit. But at the same time I can go a little bit now because we have some time. When you look at the credit, there are few marks going to be there. For example, when you look at the credit bureau, if it shows R00 means is showing here 2 new rate. That means the credit is not updated, the 2 new. They just started the credit. That means R00. R1, credit R1 mean revolving credit. R mean revolving credit, by buying and paying, revolving credit. If you pays within 30 days of payment, the due date, not over 1 month past due. Again, for example, your payment supposed to be on February 15th. If you don't pay February 15th and you going to pay for February 20th, it's not going to affect your credit. You are still R1. If you don't pay it for 30 days, February 15th credit, you don't pay it for 30 days, is going to under the March 14th or after. That's been 30 days you didn't pay the credit. That's going to be under the problem. This your 1 month delay. Your 1 month delay. Some people say I only missed for 5-6 days. My credit company put it in the credit. I don't believe that one. Double check. There are some phone companies and few things are a little bit fussy. But at the same time, the regular good companies, 30 days been past due, 30 days been R1. R2 past due, 60 days, 2 months. R3 past due, 90 days. After that one, R4, 120 days. Sometimes you don't see R4. After R3, they can go for the collections. R6 rating is not existing. R7 making the regular payment through the special arrangement. Settled from credit counseling. Some people's credit bureau, you can see R7. That means they go to the proposal and third party paying for them to bring it down the credit. That's called R7. That's special cases. R9 mean is a collection. R8 voluntary involuntary. Okay. R9 mean bad credit. That's called bad credit under the collection side. I even talking to one of the client last week, or not this week. They said Gudo. Gudo is one of the phone company. What's the company? Gudo. Yeah.
Yeah.
Gudo is one of the phone company. Their balance only $6. The balance only $6. He didn't pay. He didn't pay. His credit is now one R9. The credit went down from 775 to 596. Again, he said only Trans Canada went down and Equifax did an update or something like that. Anyway, it's possible. But at the same time, you can see that one. Explain to the clients. But for example, as a knowledge side, buyers may ask, if the buyer's credit is bad, doesn't mean you are kicking them out. No, you have to work with them and make them to bring the credit up, and you sell the house not today, after 6 months later. How are you going to push the credit up? Anything can be fixed in the life, right? Yes. Whatever did past is past, but anything from today and onwards is different life than what the past life we did. That's the basic rules. Okay, for example, somebody's credit, you have to explain to them how to increase the credit rate go up. That's, you can even go to Google it and learn and call the mortgage brokers and come back and ask question. I can give you whatever it based on my knowledge. Okay, for example, somebody's credit card, say $1,000 credit card, up to, in my knowledge, up to 60%. Up to 60% of the card, you are rotating only up to 60%. Your limit is 1,000. You are rotating up to $600. Your credit score go higher. If you take the cash advance, credit score lower. If you are buying stuff and paying on time, it's go higher. If you are paying the minimum payment, yes, credit rate goes lower, but doesn't affect, but the rating is go lower. If you pay more than 3 times more than the limit or 4 times more than the limit, after this one, I cannot come 5 minutes. You can ask any question come for this area. I'm telling only my level. You can push the credit. Okay, for example, one client is my own client. Come to me with 1,000 credit card, 1,100. What you have to do as a realtor? 1,000 credit card. I just pick the example, guys. Okay, 1,000 limit credit card, 1,050 or 1,100 showing. Definitely, his credit is going to be 600 range, 620 or 580. But you can advise them 2 options. One option to pay the money up to 60% limit. Another good option is there too. Tell them to simply make a phone call to the credit card company and increase the limit without paying the money. Increase the limit to $2,000. That means his credit card limit is going to be $2,000 next month. His credit outstanding limit only $1,050. That means his credit can go up. There are so many ways you can do it. Second thing, if somebody's credit is R9, for example, you are going through, you can talk to the credit counselors better, but as a real estate realtor knowledge. Okay, for example, one of the companies, say for example, one of the phone company, you didn't pay the money or some problem, the credit is bad. That phone company is not existing in Canada. I did this one myself for one client, guys. Believe me, Kmart, one of the time, one client came to me with one Kmart card and other card. Both the Petro-Canada gas card. The Petro-Canada was giving the credit directly. After that, when they changed it to a different company. In that case, I told them I helped them to write the letter to the Equifax Canada, the Kmart. Okay, give me the proof. I have the card and I didn't pay this money. And same thing, the Petro-Canada that time. What happened? Both companies are not existing. Even though R9 credit, they cancel it. They had to, because the particular company is not existing in Canada. In this case, you can fix it. What I am trying to say, there are as a realtor, you bring your knowledge. You have to bring it up in all different areas. But at the same time, you are not giving the legal advice to anybody. You can let the mortgage brokers handle those advice. But at the same time, there are ways to fix many things. There are ways to make many things. If there are any issues in the credit, okay. Then the reason I started the credit today, what happened, many salespeople, many of the Canadians, what they did, they're deferring the mortgage program. When they defer the mortgage program, mortgages, when they defer the mortgage, government said, if you don't have the money, you can defer the mortgage 5 months, 6 months time, you can defer the mortgages. What happened, when you defer the mortgage, I have one report and reading the extract word, whatever is there. That's the reason I wanted to tell this one today as a credit. Otherwise, I had to pick the credit as a one full day seminar. Okay, they mark here, under the mortgages affected by natural or declared disaster. Again, guys, I'm reading the credit bureau. What is the wording there under your mortgage? There's not R1, R2, R3, anything. The mortgage affected by natural or declared disaster. They mark here. That's mean if you sell your house without checking a credit, after you sell your house, you go and apply the mortgage to a different place. But you was affected by the COVID-19, the disaster. Then you don't able to pay your own mortgage for this particular company. How are you going to get the new mortgages? If somebody is selling and buying the house, please use your head rather than the heart as a real estate agent. In that case, check the mortgages. Very important. I see many cases here. Their mortgages, even the same banks. Of course, they're not going to the same bank. Not going to give you already defer the mortgages. Government say you can defer the mortgage, but at the same time, banks are not happy with that one when you defer the mortgage because you didn't pay the mortgages. Careful. Tell the clients to pull the credit bureau and see what is there before they sell the house and buy the house. Otherwise, they can get in trouble. Again, I read this one. The report rating, they mark 3 months. Payment frequency deferred for 3 months. Previous reporting is 32 months. 32 months was good payment. But sorry guys, I keep stressing you. Under the credit bureau, if somebody defer the mortgage, is showing they are affected by natural or declared disaster. For how many months also they mark? You receive 3 months, 5 months, 6 months. Don't blame the mortgage brokers. Don't blame the real estate. Tell the real estate agents are careful yourself. And the next part I said today, what we're going to talk about it today. Discharge, and what else can I say today?
Discharge and discharge.
Registration and discharge. Yes, under the registration and discharge, everybody need to understand what this means is mortgage registration. When it's come to the mortgage registration, there is a the lawyer's job to do the registration. Someone came and asked last class, land title registration, the mortgage registration, charge and the deed within how many days different? I said 2 minutes only. The bank's giving them only 2 minutes. Somebody buy the house, they are transferring the house under their name and they're registering the mortgage is below that one. Within 2 minutes, most of the banks are giving. Okay, that means registration means where you are getting the mortgage, that particular bank's name is going to be there under the registration of your under abstract. You can see it under the land registry. Not the land registry, under the title you can see who is there. For example, the reason I picked this one registration side, there are some confusion for some people. They come in with 10% down payment and they think other 10% down payment, they want to borrow money from different institutions. Those are the one they're thinking is illegal, but it's not legal under the bank term. Under the bank term, it's not legal, but when they're registering the mortgage, if you are disclosing, it's only one mortgage. Yes, registering the second mortgage immediately, same day before funding is an issue. Talk to the lawyers and the mortgage brokers very clearly for those ones under the registration. Discharge. When it's come to the discharge, again, you can discharge. Once you pay off, whether you keep the house you own, you're paying off. Either you discharge or you let the banks keep the registration with the zero balance. That's up to you. For example, major banks, if you go and discharge, it costs around $300. Yeah, it costs around $300 to discharge the mortgage. The bank charge you. Or else, if it's a private mortgages, just you go to the lawyer and ask them to discharge completely. Sometimes even major banks, even though you paid off, lawyers undertake and pay the money. But at the same time, the title might shows the bank's name is under the charge category. This one of the side. And anyone have any?
Back all this.
Anyone have any questions? Okay, we have a question.
Yeah.
Oh, Victor sent one question. In a new condo construction, the purchaser advised the builder that her child in the university is going to live in the unit and the purchase doesn't pay the HST. Can the child rent the unit for the first 4 years? Okay, I think the question is here. getting the rebate, he's saying when they buy it, they're saying the immediate family member, that's the child, the immediate family member going to leave that university and getting the rebate, not to pay the, not everybody has to pay the HSC. There's no matter what, the government doesn't give anything, but the rebate portion, under what category rebate, your question based on owner occupying rebate, because the daughter is going to live there and the immediate family member living there. In that case, they are getting the owner occupying rebate category. Can the child rent the unit for the first 4 years? Okay, for example, here, Victor, the question is here. I want to repeat the question to everybody understand. Hope this is your question. Father buying the condo, father saying the daughter going to live there near to the university area. After they buy, they are discounting as a owner occupying discounting. He is getting it. And your question is, can the child rent the unit for first 4 years? First 4 years means after they buy, they won't rent out. In the particular, the daughter leave that particular house, particular condo, and they're going to bring somebody under the shared accommodation category, under the CRA term, shared accommodation. Yes, the daughter is living there. If the daughter doesn't live there and completely renting there to somebody else, that means the father lied to the government. The father said, daughter going to live there, daughter not going to live there. The father can say, the CRA immediately, I was thinking the daughter going to leave this Kingston University for medical college, but at the same time, she went into Waterloo for different courses. In that case, you had to revise the application. We do, our company does. We do the revise application. My tax companies, we are doing the revise application. We had to inform the CRA. Just the time of the purchase, I thought maybe my daughter going to live in Kingston University. She's not living in Kingston University right now. I want to rent the property. Then revise the application and cancel the owner occupying rebate and get the new rebate for the HSC rebate. And the portion, if any portions come, minor portions or interest portion or anything, they had to pay it. If I understand your question right, Victor, or else you have any other thoughts?
Yeah, I think that has answered the question. So thank you. Yeah.
Perfect. Okay. The next one from Mano. How much the fees range charge for the GST rebate application? Mano, I mean, are you asking the fees from our office side? Yes, we are charged $250 only. There are lawyers charging sometimes $750,000 and everything. Any kind of application, we charge only $250 our side. If it is a fees means, that's what I feel like, the rebate application. But at the same time, I want to mention something. For example, the property value is less than 450. When you guys buy the property value less than 450, that means GST and HST is included. Our fee is the same, but the same time GST is HST included. After we apply to the government of Canada for the rebate part, when we get the rebate, there are some issues may come. Government of Canada, HSC department might ask, okay, you bought the property for $430,000. Now, how much is it worth for? With the worth for example, the property is worth for right now is say around 550. In that case, more than 450, there is no rebate for the GST side. The GST alone, they're going for the market value. In that case, Mano, we may go back again and get the appraisal or else we had to ask for the real estate agents, CMA. That may cost some extra in some few cases. We know if we want to go for an appraised value, and the appraised value is supposed to come for the market side and everything, extra appraisal fees, or else we can ask the real estate agent to get the CMA. The real estate agent might ask, I couldn't do myself. In that case, we had to pay extra $100 or whatever. Basically, our HSC side, either owner occupying side or rebate side or whatever comes, the charges is $250. There's HSC included. The next question, Raj Masalamani. Hi, Silvana. Is there a limit to claim HST when buy 3 or more properties with the builder to rent it out? As for my knowledge, I don't see any limit, Raj. If you are buying the unit, okay, you are buying 3 or more unit. That means you are telling them you are going to rent it out. Each and every unit you are paying 24,000. After you rent out, you are filing the application, separate application. Okay, let me check it out. This is the question. 99%, I think I am right. There's no limitation under the Exercise Act for the how many you can buy. There's no limitation, but still, I'll come back to this question. This is a good question, Raj. Nobody asked me this question. I did some clients. I did 2 properties or 3, 2 properties mostly I did, and the husband and wife bought the different properties. But nobody come to me more than 3 properties for the same time. And throughout the life, I did some people 7, 8 properties, but just one shot. Let me check it out for that question. How many times they're eligible for the HS rebate for the rental properties for the. Okay, it's a very good question. You make me learn something too. I'll come back to the next class for next Saturday for this one. The next question, Rubni, Mr. Selva, if an individual is buying another property, would be considered strong enough for mortgage side, add to co-signer, or get down from the equity of current residence by refinancing and current home. If the individual is buying another property, would be considered strong enough mortgage side to add co-signer or get down payment from equity, current residence, and refinance for the current house. In my side, Rubni, depends on each and every situations are unique. The co-signer, not everybody take as a co-signer. Co-signer, sometimes they coming as a co-borrower, and their title come to the same house. As I said last class, when 2 people come, other than the 50% joint tenancy category, in case anything happened to one person, other person cannot take over the power. Then he has to go through will. He had to go through probate. Then we had to pay for the probate fees. As I said last class about the probate estate tax, we talked about last class. They had to pay for the probate and to get it in your hand, that particular person. Even though that particular person, the co-signer can, even though husband and wife, even though husband and wife, if not 50-50, different percentage as a co-signer percentage, 2%, 3%, or whatever the percentage, your son-in-law, brother-in-law, father-in-law, anybody. It's not the equal percentage as a survivor benefit. Survivor rights doesn't come into this situation. That's come under the tenancy in common. That's probate, and so many things are there. Answering your question, I would say refinancing your primary residence and put it 20%, buy peacefully. Whoever name you want to buy. That's my answer, rather than bringing somebody for the co-signing part. Co-signing, the reason for the co-signing, your income is not enough and you want to bring somebody's income to qualify in the GDS ratio. That's what the co-signing part. Even though you own money down payment, you're bringing somebody for the income purpose, okay? In my advice, go for a refinance and go under your name. And next question from Nisha. Hi, Silvana. After we open the PRAC and HSC number, do we have to close the previous HSC number? You don't have to close the previous number, Nisha. But at the same time, if you want to use it for any other purpose, you can keep it. But you have to file 0 tax for, doesn't cost you any money. When you file your, okay, her question, she already have a HSC number under the personal name. Now she have a PRAC corporation. Then she asking, after I get the PRAC corporation under the new number, do I need to close it? Answer is yes and no. If you think you don't need it, just one simple phone call, say you close the business and you are under the corporation right now, you don't need the number. They will close it down. And you are closing today, for example, you are closing today, February 13. You can tell them there's no income since December 31st. In that case, they can close it for December 31st. Or from today you close it, you may need to file next year for the January 13. But anyway, if you keep it yourself, but just you can file 0 income every year. That doesn't cost any money when you do the return. There's no mandatory part to close. If you think you don't need it, you can close it. Okay. And the next question from Mano. Hi, Silvana. There is 70 years old father, has 2 kids with special needs. Both are age 30, age of 30, who are currently living the apartment. The father has 400,000 and he needs to buy a house. Is there any difficulties to get the mortgage? Okay, Manoj, yes and no answer, but we are real estate agent. We had to be say just to do things. In this case, your question is, father is 70 years old, father has 2 kids with special needs. The special needs, if they are the special needs, they may get some money from the government. Okay, that's considered as an income for them. ODSP, one of the ODSP is one of the income. I sold property to ODSP clients. Many ODSP clients I sold the properties to. the father has 400,000 and he need to buy a house. Is there a difficulties? Okay, we had to structure this deal. I assume there are special need people are getting the ODSP. The ODSP can be Canada Pension Plan ODSP or else Ontario Disability Program. I am taking this right, Ontario Disability Program. That's the hardest one. Then the Canada Pension, Canada Disability Program. Okay, what they had to do, the father and the both kids has to buy the property. In that case, Disability Department, Ontario Disability Department, we had to disclose the kids are buying the property because Ontario Disability is a very good department. They want to encourage, they have a house. It's because it's not a welfare side. It's a disability program. In that case, if they have equity in their life, they want to have a better life. In this case, if the application can go to the father's name and the both kids' name, and we have to disclose the money come from the father, not the kids, because the kids doesn't have money because they are under the disability program. Okay, the kid doesn't have the money, and we can qualify the mortgage. I don't see any problem. Age is not an issue in Canada. 70 years old man can have 200,000 income. You know, some people went to the prime minister, US presidency, 74 and 78. But the only thing, after 60s, you're not going to get the mortgage. Mortgage insurance is the one looking for the age. For example, 70 years man, they have a pension. Yes, you can show the pension income. And for example, 400,000 equity. 400,000 equity. There are some cases. If you have the money, you can use the money for the mortgage payment. Structure the mortgage is different category. There are so many ways. As a realtor side, this plans you can work on it. If you need anything, maybe we can discuss one-on-one, and I can give you some help. The next one from Ganesh. Could you please add my number to the WhatsApp group? Okay, that's we can do it, Ganesh. Anthony sent the message to, hi Silvana, what are the advantage and risk of have a mortgage license and real estate license? Okay, Coca-Cola, only one company made billions. Hope you understand my answer. Coca-Cola, now they are having a different product. Only one product, they made billions and billions. If we can do one job right, you don't need to have another mortgage license. I'm not discouraging, guy, but I'm telling you, don't think Silvana business is real estate business. That's the reason he doesn't want to go to mortgages. If we are meeting the clients, you can have, okay, I answer your question straightforward. You can have real estate license and a mortgage license. As long as you have to inform the FISCO, you have a real estate license. You have to inform RECO, you have a mortgage license. As long as you inform both parties, you can have it. Okay, why you want to have two? Only one industry you can make millions. You don't need to have two. For example, look at this way. You are selling the clients one real estate client. If you are selling the real estate client and the same real estate client, if you're going to do the mortgages, any RECO issues come, you'll be in big trouble because the same client you sell houses and you do the same mortgages. Second thing, if you have mortgage brokers job, you have to have a good in English writing, story maker, and they are sitting and you go and wait there and give the deal and you are phoning them again and again. Can you approve my mortgage? Can you approve my mortgage? It's a different type of business. In this case, where the mortgage brokers are getting the deals from real estate agents, not the past client. From real estate agents are going to the mortgage brokers and introduce the client. In that case, if you are a mortgage broker, there's a trust is not there. In my side, answer your question straightforward as a broker record. As long as you disclose, just you can have both license. As a financial advisor and my experience, background and everything, do one job, learn right and do it. Either mortgage or real estate. You could make how much money you need? 500 million, you can make it. Okay, next question. Can you from Sony, can you please explain natural or declared disaster? Did you mean to say if one could not pay the mortgage under the above category, is it forgiven and wouldn't harm the credit? What do you mean forgiven? No, nothing is forgive here. For example, Sony. Okay, government, when the pandemic start, what the government position, everybody not go to the work and they may lose the jobs and the employer terminate and everything. Government of Canada handle it very nicely to stay happy, no crimes, stay home and happily. to pay the mortgage. That's the reason they gave you enough money without checking in $60,000 loan for some business people, and 2,000 for 7 months, and after that they still continuing some cases. And this one also, they said you can defer the mortgage for 6 months of time. That doesn't mean this is coming under the declared disaster. This is a declared disaster, not natural. And credit bureaus mark, but I'm not saying it's affecting your credit. It's an information is there, sorry. You can come out and talk. That's easy for me, whatever in your mind. Is actually not harm the credit means, not bring down to your score. As for my knowledge, we can ask Kannan again. This question, I'm going to call him very soon. But at the same time, in my knowledge, is marked clearly there, you was affected by the disaster. In that case, you won't apply for the new mortgage. They will say, you didn't pay your own mortgages for last 6 months because your job was affected. That's one of the mark. I don't think is bring the credit score down. Okay, the next question, this question is nothing to do with credit mortgage. Can you move a little bit, please? This one I finished already. Oh, sorry. Okay, the Suren sent a question. Father and the mother own home with 500,000 mortgage left and declare to move into leave the home for their kids. How to do the changes happen when the title and the mortgage. Okay, Suren is a very good question. Okay, father and mother have 500,000 mortgage outstanding. They have $1 million worth of house. They're going to transfer to the kids. Okay, transferring with the father to the kids, consider as a third party. That's mean they had to pay for the land transfer tax. Plus, how much they're going to transfer, how much property value they're going to put. Minimum they had to put for the mortgage value or else present value, doesn't matter. What are the value they are giving them? What are the value they are disclosing to the lawyers? What are the value disclosing to the lawyers? They need to have, they had to pay for the land transfer tax. Okay, the kids are first time buyers, they can get the deduction from the land transfer tax. And 500,000 mortgage outstanding. If the 500,000 mortgage outstanding, the both kids, supposed to be one kid or both kids, so it doesn't matter. They had to qualify for the 500,000 mortgage for the bank institution. If they are not qualifying, they cannot pay. In that case, the bank not going to give the permission to transfer the house to the kid's name. Okay, legally transfer the house to the kid's name. They had to qualify the mortgage first. After they qualify the mortgage, they had to come up with the values. They had to come up with the values and pay for the land transfer tax and move on. The next question for Dilip, regarding the assignment sale, say original price is 500. Does the buyer have to pay 600 extra 100 plus HST at the time of the closing with the builder? No. The Dilip is a very good question. You're asking the original price is 500, assignment price is 600. With the closing time, HST for 500 or 600. The original the assignment deal is going to show the amendment of assignment. The price is going to be 500, not 600. Original builders price is going to be for the land registry price and everything original price. Okay. They may pay some HST for the profit and the deposit. That's separate category. But your question for the HST rebate, builder's price. Silvana, can you, sorry, who sent me Raj Maslamani. Hi, Silvana, can one person co-sign for 2-3 people, and does it shows the co-signer credit bureau? Yes, it shows the co-signer credit bureau. Second thing, can one person do it? Yes, the one person declaring $1 million income in his portfolio, the banks accept that one because he have enough income. If his net income is $1 million, yes, he can even co-sign for many people possible under the TDS and TDS ratio. There's no limitation. But the same thing, you can 5 mortgages under your name. The second thing, Dinesh, if I keep my business account with balance, let's say 2,000 and no income, can I still do nil tax? Okay, yeah, it's a good question, Dinesh. The tax purpose, your tax period, how much money you have it in the balance, it doesn't matter. But how much income you receive, according to the question, if I keep my business account with balance, let's say 2,000 and no income. If no income for a business cycle, that's mean if it's a corporation, June to next June or April to March 31st or January to December, there's no income, nil tax. But you have to show that $2,000 under the balance sheet as an asset, but you don't pay the tax for that one. Income only you pay tax. Asset, you're keeping the asset in the bank, you don't pay taxes. Okay. Next one. does realtor have access to get the online survey? If yes, what is the changes? Is okay. Online survey, yes, you can get it, but the realtors, you have to go through the Geo Warehouse. When you go to Geo Warehouse, you can check the particular under the survey system, the survey category, that particular house. They have a survey company. If they post it under the through Geo Warehouse to make money, yes, you can pull it. Otherwise, you don't have access. You have to go to different website. No boundary.com, and so there are a few other websites. You can go and check it out, the surveys. But realtor, yes, you can do it through Geo Warehouse. But that if the survey company posted through Geo Warehouse and they charge you money, yes, of course you can do it. Sugandhini asking the question saying that what is a mortgage portion? Mortgage production plan under joint ownership. If one person pass away, what would happen to the mortgage balance if waive the portion? Okay, Sugandhini, the question is, you're asking what is the protection for the mortgage plan? Yes, mortgage insurance. Yes, husband and wife buying it, they have mortgage insurance. If one person passed away, the mortgage, they, as for my knowledge, again, different institution can be different. As for my knowledge, they'll pay off the full mortgage. Husband and wife buying it or two brothers buying it, both they have mortgage insurance. One person dies, they pay the full mortgage amount. That's my answer. Okay. But if it is, that's supposed to be under joint tenancy. If it is coming under the tenants in common category, you are having only one person and other person having 99%. There's an issue going to be there. Which person dies is important. Okay. The next one is that's all right. Kana, you want to answer? Sony, you don't mind to come to the screen, Sony? So Sugandhini, go ahead. Yeah.
Yeah. So if I waive the protection, what will happen if they won't pay it?
Sugandhini, you know the answer. If you waive it, that means you don't have the mortgage. If you don't have the mortgage, that means they don't need to pay you. You didn't pay the premium. You didn't pay the monthly premium or anything. That means, Sugandhini, you waive it. That means you are saying you don't need the mortgage. You don't need the protection. You don't need the mortgage. In that case, you don't have it. Sorry.
Thank you.
Sony, can you ask your question again?
Yeah, I'm here.
Can you come to please? Sony's question based on. Okay, you know both you back have to be yeah. Okay, Sony, go ahead. Yeah.
It's this is a clause I saw in one of the listings, a per tenant interest. I tried to read about it a little bit more, but I couldn't get a really good.
You're asking the mortgage disaster question or different question, Sony?
No, this is a different question.
Okay, can you repeat again?
It is called. I'll send that on screen here. This is a clause that I saw, a per tenant interest. You or anyone knows about what this is and give us some examples?
Sorry, Sony, I didn't get your question. I didn't understand your question. Did you understand his question? Okay, you want to answer it now? Sorry, Sony. You don't mind to repeat again third time? I'm so sorry.
Yeah. This clause, what you see on the screen, what I just typed.
Oh, current screen you type. Okay.
It is a clause that I saw.
Hey, Sony.
Sorry, go ahead.
Hey, Sony, quick way to answer your question. Well, honestly, until you posted it in the group, I didn't know the meaning of that as well, but Google helps a lot. So opportunity interest basically means it's in respect to land and any parcel of real estate property or interests therein. And it deals with easements, tenements, any type of periods put on the title of the property. It comes into contact, especially with large parcels of land and commercial properties. So this is the interest that you're referring to is nothing related to mortgage purposes. It's not an interest rate or anything like that. But this is something that your lawyer would have to look into, of all the liens registered on that property specifically. So I'm assuming the listing that you're looking at is some sort of form of property that has land or any form of commercial interest on it.
There's one question here, Silvana. Can you, I wanted to clarify the Dinesh question. He still has to file the nil tax. Okay, that's me in the previous question. Previous question came from the Dinesh. I don't have a zero income, nil income, but $2,000 sitting in the bank. Do I need to pay for the taxes? You have to filing the taxes is mandatory. That's one of the law as a Canadian citizens. Every citizen has to file the taxes. Especially the income tax return is two kinds. If the personal income tax return, the very first wording, income tax and benefit returns. If you don't file, you don't get the benefits. For the personal side, okay? The benefits mean child tax benefit, GST benefit, Trillium benefit. You can name it any benefit you want. Everything has to come from the CRA side. That means you have to file the tax. Even though zero, you have to file it. Okay, if we have an income, you don't file the tax. With continuously more than 3 years, you don't file the tax, they have a right to charge you in the courts. Okay, this question came from corporation side, in your business account. Yes, corporation has to file the taxes every single year based on the minute book and the shareholders agreement. When they're going to file the taxes, they can pick from the very first year based on the tax year. When is the tax year? They have to file the taxes and the HST. If they don't file it, every single year, whatever you don't file it. Even I have one client experience, I can tell you. The client supposed to file the HST every 3 months and the taxes every year. He didn't file it for 6 years. The CRA sent the notice and he still ignored it and they put it in the courts. Before the court's date, he came to me and he filed the corporate taxes for the 6 years taxes and 24 HST, he filed it already. He went with a copy of the return to the courts and still the courts charge because the court's time and everything, I believe around $30,000 penalties for that particular client. Okay, answer your question, even though nil, yes, you are Canadian, under the Canadian regulation, you have to file the taxes, even though it's nil. Okay, thank you. Any questions we have, Anna? No. That's all for today. It's 11:25. If anybody want to come and speak up, I have time another 5 minutes to talk. If not, I told you guys last class too, Wednesday, I can't make the Zoom. Wednesday, I have one of the arbitration. Okay, before you guys go, I want to mention, sometime I wanted to discuss with you guys, not to discuss with you guys, the feedback I want to give you, what are the phone calls I am receiving from my end. We have successful, happy to say, we already reached 600 agents now, 500 plus for a while, and we are reaching 600 agents now. Okay, I may get many calls. Every phone call